Subhani, let's talk gold.
Let's do it.
Okay. Gold. How should you buy gold? And now, as an income producing investment, gold isn't too good because you pretty much need to sell it for more than you paid for it. But here's where people are really getting tripped up and in some cases losing massive amounts of money.
That's a polite way for saying scammed.
Scammed. There's a lot of custodians and gold sellers that says get your money out of the market, buy gold. Seems like a good concept. Uh, and so what happens is, first off, they charge about a 20 to 30% commission, which is pretty significant when you think about it. The second thing that we have seen, we had one guy, he came into our office, he had bought gold coins. And what they did was they bought the coins directly from the mint. And so they were twice the value of their melt price. And melt is basically the amount of ounce sold to gold per ounce. This is what it's worth. And so even though gold had gone up spectacularly in value, he still was in a huge loss because there was no way to discern whether he could sell these coins for more than what their melt price is or the price you could melt them down for. And see, this is the tricky part because a lot of these guys, they call you and they say, oh, yeah, there's a big market for it. You'll be able to sell these to anyone. And so you're doing the transaction in your IRA. Well, first off, you can't take custody of those coins. They got to be held somewhere. So you don't even see them. And then when you go to sell them, you find out no one wants to buy these coins for what you paid for them because you paid twice what the melt price might have been. Sometimes it's a little less than that, but I've seen some pretty disastrous situations, and plus the really high commissions, and then you're paying storage fees because you got to pay sometimes hundreds of dollars to store the gold at a storage facility that does that. So we recommend if you want to invest in gold, silver, or really any precious metal, what are we recommending to people, Subhani?
Use an ETF. They're out there.
Yeah, ETF. Here's the thing. The cost is like 0.10 to zero point 0.4 of 1%. Now, somebody said, oh, that's a lot. That's not 30%.
A lot cheaper than any of the other physical custody offers.
Absolutely. And it's liquid. You buy it for what the gold or the silver is worth per ounce. You sell it for what it's worth per ounce. There's no trying to find somebody to purchase it because it's perfectly liquid and any business day that you can just do the trade. So if you do want to buy gold, again, we think for retired people, it's not a great asset because it doesn't pay dividends or interest. But if you still want to buy it an ETF inside your retirement account. Now, let's say you're buying it outside a retirement account. Here's something people also don't know about is when you tax the gold, you get the collectibles rate, not a capital gains rate, which is significantly higher than capital gains rate. So you buy all this gold, you turn around, let's say you doubled your money. You bought it at one price, you sold it for double, and now you find out you're not paying a 15 or 20% capital gain rate, you're paying a significantly higher collectibles rate. And so in that case, it costs you a lot more in taxes. What's again the answer to that, Sabani?
Just buy it in an ETF.
There it is. It doesn't get nailed with the collectibles rate. So if you're going to go down the gold route, go down the road in a way that you're liquid and you're getting the best tax rates possible and come talk to us.